Good evening and welcome to the webinar Let's Talk DVP, which has been organized by the Colombo Stock Exchange. My name is Rajiva Bandaranaike. I'm the Chief Executive Officer of the Colombo Stock Exchange, welcoming you today. And with me, joining me for the webinar today are four of our industry colleagues. Mr. Tushara Jayaratna, who is a director at the Securities and Exchange Commission of Sri Lanka. Mr. Jalia Vijayaratna, who is the president of the Colombo Stockbrokers Association, representing the stockbrokers, and also the CEO of First Capital Securities. Mr. Chandrakant Jayasinghe, who is our Chief Information Officer at the CSC, and Ms. Dulani Valnakalu Surya, who is heading our DVP project and head of enterprise risk management. So that's the team that we have assembled today to meet you and to answer all your questions and clarifications. What prompted us to have this webinar all in a rush is because of all the comments that we observed, concerns, and a lot of questions that surfaced over social media on Saturday following the announcement of the go live of DVP. So we very hurriedly put together a webinar today, and I must thank Place on Record appreciation to the marketing team for very quickly putting together two webinars, the Sinhala one which we just completed a little while ago, and this one to address some of these concerns. I think they were up till 1, 2 in the morning today to put all this together and send out the messages. So we are here today for that. Very briefly, I'll sort of set the background before we get to a whole heap of questions that have already come in, and we are hoping to answer them today. Why DVP? Why a delivery versus payment system? There are some very good reasons why we want to move to what we call delivery versus payment system. One is that this will lower the overall settlement risk in the market. It will reduce the asset commitment risk. Secondly, we are bringing best practices into the way we operate the market. And thirdly, this will be one of the important steps that we take to facilitate new products. Now, I know we have been talking a lot and wanting new products, for example, financial derivatives, etc. If we are to do that, we need to first get the basic infrastructure in place, and these are first step. We need to do DVP. With DVP, that will allow us to go into a central counterparty guarantee system, which will allow us in turn, for example, to go for products like financial derivatives and even certain other products. So there are some very good reasons why we are introducing DVP. So what is DVP? DVP simply means you are delivering your shares on payment. Now, currently, I'll very briefly explain this, and we'll get to a little more detail as we go on the questions. Currently, when someone buys a quantity of shares in the secondary market, the shares move instantly from the seller's account to the buyer's account. So you get custody as a buyer, you get immediate custody of the shares. But as a seller, you get paid 3 days later. So there is some form of risk associated with the seller parting with the shares, because you are going to get paid 3 days later, and there's really no guarantee for that cover. Although we have put in place a lot of mechanisms to ensure that there are no failures. And I think as a market, we have an excellent record of 35 years without a single settlement failure. But this is not a good system. We need to have a more robust, globally accepted practice of settling securities, and DVP is the norm, and it's practiced globally elsewhere. So DVP essentially means we are moving the delivery onto the third day after trade day. So under DVP system, as a buyer, you will not get immediate physical custody of shares into your CDS account, and the seller will not lose custody of the shares until the third day on settlement day. So it's only on settlement day that the shares will move from the seller to the buyer, and that's called delivery versus payment. You make the payment and you will get your delivery and shares on payment. That's the concept of DVP. But what is important to remember is that even though we move to a DVP system, there is no change whatsoever to the current practice and the methodology of investors trading and settling in the market. And that's what we are here for, to give you that confirmation and assurance that the manner in which you trade and settle will not change. And we have done the system in such a way that you can continue what you do uninterrupted, with the added advantage and benefit of having a delivery versus payment system built into the entire market operation. So that's all I'm going to say as a by way of an introduction. And let's get to the questions, and we can deal with more detail as we get on to the number of questions that have come. We're going to ask number of questions, but it all relates to, we have summarized the questions, and hopefully we can answer all of this as we go along. So the first question that has come in, I'll pose it to Tushara. Tushara, there is an investor who wants to know, will the introduction of DVP slow down the market from moving upwards? Over to you.
No, Rajiv, I don't believe that, because the markets can go up due to different reasons. Maybe political factors, economic factors, company-specific factors, even company profitability. These are the reasons. Markets will go up and down because of these reasons. But DVP definitely will have a positive impact on the market. For example, as you mentioned earlier also, when we meet foreign investors, one of the first question that they ask normally whether we have a DVP system, DVP. So DVP definitely will help the market. It will not curtail any market activities, but it should theoretically, it should help the market, and then it will increase the efficiency of the market also.
So very clear that any trend in the market has really nothing to do with DVP. The second factor is that we just announced it on Friday. We're hoping to go live end of July. So we have nearly 1.5 months to learn about this concept and to really understand what DVP would mean, and what it will mean to an investor, what it will mean to a market as well. And in that connection, we will be hoping to host very many webinars and seminars of this nature to talk to you about DVP and how all this will work. So you have ample time to really understand how the DVP system really would function. There's a second question that has been posed to us. Will short selling be detrimental and bring down the market and stop it reaching new heights? Now, with DVP, what it will allow us is to enable short selling. But what we have decided is that in the first instance, when we do introduce DVP, we will not permit short selling. So I think at the initial stage, once we introduce a DVP system, we will let the brokers get familiarized with the system, get comfortable with the system, iron out all of the whatever settling in that you may need to do with the system, and thereafter look at introducing short selling at a later point of time. So short selling is something that we don't need to concern ourselves just yet. We only need to understand this concept of DVP. Short selling will come in once I think we introduce DVP, we stabilize ourselves with that system, and then progress on to short selling. And before we introduce any short selling, we will go on a process of educating and imparting the knowledge as to what short selling is and what it will entail, and all the intricacies connected with short selling at a later point of time. So as of now, what I can answer is that we really don't need to look at short selling in the very short term. Let's bring it at a future point of time. So the third question is an important question which has been asked by several of our investors, and this is about broker credit. Will this, meaning DVP, affect broker credit that they are given, investors are given presently? Will brokers force sell or close the margins to clear the positions before DVP is introduced? So I think the best person to answer this is Jalia. Jalia, can I ask you to respond to that?
Rajiv, there will be no force selling on broker credit. Not so forever. I mean, there won't be any force selling taking place because of the DVP issue. It will be like the normal T+3 settlement process will take place, and we will not force sell at any cost after implementing DVP. As long as the investor is with the conditions of the credit agreement, there won't be any force selling taking place after DVP has been introduced.
Yeah, so you got it from the horse's mouth virtually. If you talk about DVP, it's a system of recording ownership in the CDS. When you talk of broker credit, it is something that the broker will extend to you to buy shares. So it's totally two different things. So I really can't see any impact, the recording of ownership in the CDS having an impact on broker credit. It's two different concepts. So I think we need to understand that very clearly because this is something that a lot of people have misunderstood. And we, in fact, Jali got a lot of questions relating to broker credit and force selling. It's totally two, it's independent of each other. And I think we need to make that very, very clear to anybody who has a misconception about it. Another question that is somewhat connected to broker credit is about, again, margins. And there's a question asked, do we have to settle our margins with our margin providers and brokers before the launch date? Dulani, can I ask you perhaps to respond to that?
Yeah, so as Dali explained, there's no impact from DVP implementation to the credit obtained from the broker or the margin provider's margin facility. So investors can continue their trading pattern as it is the way that they are doing right now. So there's no impact from the DVP implementation, that as saying that while when we launch DVP, you all have to set your credit or the margin. So it's the same. So you all can continue with your current agreements and current practices. So there's no change from the DVP for your margin facilities or the credit facilities. So as long as the broker does their net settlement, then the CDS is fine, and then we will give the securities to the respective clients. So there's no impact from the credit facilities with the DVP implementation. So it's as it is.
This one more point. Now, giving credit basically is a broker's decision. So stockbroker firm, if now there are stockbroker firms, they don't give credit. There are some stockbroker firms, they give credit. But after the DVP, when we launch DVP, if any broker firm, if they go and tell investors, okay, here we can't give you credit because of DVP, that is totally incorrect. They can't do that. And also, if even any investment advisor, if they go and tell investors that, okay, here we are going to force sell your shares, and because of DVP, it's not correct. So what we urge investors, what we tell investors basically, if you hear anything like that from stockbroker firms, you can always call SEC or you can call CSC and tell us. Then, as Dulani and Rajiv, even Jali mentioned this earlier, these are two different things. So DVP is different and broker credit is completely different.
I think connected to that, Tushar, there is yet another question. A good thing that you did, in fact, brought it up, where one person is asking that because of DVP, there has been indication from some brokers that they may have to force sell. And if they do that, as a result, some of the share prices will be affected and some people can buy it at lesser prices. Are we advising the brokers and margin traders properly in that direction? Anything that you can add to that?
Even the SEC or CSC, we have not asked or we have not instructed brokers to force sell or not to give credit because of DVP. That's totally two different things. So what I mentioned earlier also, stockbrokers giving credit is their business decision. So there are brokers, sometimes they don't give credit. There are brokers that give credit. So it's up to them. It's their business model. But DVP, because of DVP, there shouldn't be any issue with the broker credit.
Yeah. Now connected to all this credit, I think Dulani, I like to sort of ask you this question, connected question about buying power, which is probably relevant to a lot of investors. There's a question asked, when we buy shares, the buying power given by brokers, shares are immediately transferred to the buyer's account. But under DVP, shares are transferred to the buyer's account on the day on which payment is settled? T plus 3. If so, who will have the shares which are bought until payment is settled by the buyer? The question is, who will have the shares which are bought until payment is settled by the buyer? Dhulani, if you can respond to that.
Yes, the main change with DVP is that currently when you do a purchase, you will get the shares to your account immediately. But as I said, with the DVP, when you make a purchase, you will get your shares to your account on T plus 3. But we have very clearly told these your system providers to identify this your purchase trade as a pending buy that is coming to your account. So it is anyway, if you do a purchase, it will be recorded as a pending buy that will come to account after 3 days. So we have very clearly advised that when you take these portfolio evaluations and all, you have to consider this pending buys. So if you do a day trade, there won't be any impact. So you all can, if you buy today, you can immediately sell that because you have a pending position coming in. So there's no impact to day trading or anything in your portfolio evaluations also. These pending buys will be accounted.
So in a
sense, will come on the settlement day. Once the payment settlement happens, you will get the shares into your account. But when you do a sale, it always consider your pending positions.
So in a sense, under DVP, nothing really will change, even though we move to DVP, in terms of your ability as an investor to buy, sell what you bought in the very next instance. Now, currently, you can immediately sell what you bought. I think that ability remains even under DVP, even though the physical custody of shares will come into your account only on T plus 3. So the way the system has been configured is that the system still makes a record of it, which gives you the ability to keep buying and selling shares like what you did before. So there is really no change to the method of how you have been buying and selling shares even under DVP. And I think buying power really stems from that. And another connected question which I would like to approach to Chandrakant, really under the DVP system, this person, investor asks, won't the buyer get 3 days for the settlement? Do I have to settle immediately?
No, Rajiv. So it's as the same. Settlement day will remain the same, and it will be T plus 3. That means the third day following the transaction day. So it is same as current.
So once again, we highlighted this question just to illustrate this point that even where settlement is concerned, nothing changes. It still remains T plus 3. And whatever credit arrangement you have made with your broker, with your margin provider will remain. So if you have made certain arrangements for settlement, whatever it may be on T plus 3 or later, that stands. Merely because we moved to DVP, it does not change it. It does not mean that you have to pay in advance. It does not mean you have to pay on T plus 1, or it does not mean that you need to start paying cash on T plus 3. It all depends on whatever credit arrangements you have made with your broker with regard to settlements. There's another question on margins, and Dhulani, I'd like to ask this question from you. There is a question from an investor who asks, what do you mean by non-compliance with the margin requirement? What is the penalty on that? Yeah, so this margin requirement is not something to do with the investors. They take the credit from the broker, or the margin facility they take from the margin provider. So this is something that the arrangement with the CDS and the stockbrokers. So based on the stockbrokers purchases and sales, CDS will calculate this margin requirement and we will collect it from the brokers. It's not something that we collect from the investors. This is totally different from the credit arrangements that investors maintain with the brokers and the margin provider. So there are two different terms. This term is just for the margin collection from the CDS from the stockbrokers. This is not something that investors pay to the stockbrokers. So also the non-compliance also means that if once we announce the broker saying that this is your margin requirement, you have to bring this on this day. So if the broker is failed to do so, then that is a non-compliance, and we will collect the
additional fee for that. So that is again applicable for the stockbroker. It's not for the investors.
And I think at this point, I also must stress that the collection of margins is not something new that is coming. Presently, we collect margins from brokers on transactions. So this has been in the market for a long time. Just that we are changing the methodology for computing the margins. They're not going to be a major difference. So margin requirements have been there all along. And that margin that we are talking about is applicable to brokers and whatever penalty is connected with it. And it's not applicable to an investor. So we don't have investor level margining. We do take a margin on transactions from brokers at a broker level, and this is already happening. As we talk, it has been in the market for some time. So I think it's important to distinguish between margin trading and margin requirements of brokers. I think there is some sort of confusion related to that. And I think the others can also add at this point of time. This may be a good time to clarify that, as you can understand from some of the responses that we have been giving, DVP is something that affects brokers and not the investors per se. It's a lot to do with stockbroker firms and the stock exchange. It's a lot to do with how shares are recorded. And as a result, the broker level systems are adjusted to reflect that. But if you look at it from an investor's perspective, if you look at your internet trading front end, nothing will be different once DVP is launched. You will not see or feel anything different. From an investor's perspective, nothing changes. The way you would trade, the way you would take your credit, the way that you would settle your shares, the way you even, as we will come to that question, with regard to dividends and rights, everything remains the same from an investor's perspective. So although we are doing a major change in the back end of systems, we have done it in such a way that it has no impact on the investors' methodologies of transacting in the market or the way that you conduct your trading and settlement. So that's the beauty of it. It has been designed in such a way that it has no impact on investors, but it certainly has an impact on the systems. And as I said earlier, it's going to have a very positive impact for the future development of capital markets and stock markets in terms of new products and the others. So because one would ask us, then why introduce DVP? If there is no change, I think somebody did ask that in the singular session. If there is no change, why bring it? But there's a very good reason why we are bringing it. But we have brought it and we have designed this in such a way that it's not going to impact in the manner or to investors in the manner that investors would conduct their trading activity. So that's probably, I thought, a clarification that will be good to give.
One more thing that we have to explain, I think, about day trading. We just touch it, and even there's a misperception that there are a lot of day traders in the market right now. So sometimes they think that because of DVP they won't be able to do day trading. So that's also misperception that even day traders, they can buy at say 11 o'clock and they can sell at 11:05. So there won't be any issue with regard to that also. That also we have to emphasize, I think, because there are some misperception about that also.
Yeah, Tushar, and there was also a comment made in the earlier webinar about fees and costs, whether there are added costs or different fees. Nothing changes, no fee changes, no cost changes at all, and your ability to day trade remains the same with the buying power that you have, with the credit facilities that you have. So nothing really changes, and I think we must emphasize that fact. There's another question on margin trading account, and I think Jari, I would like to post that question to you. Is it mandatory for everyone to open a margin trading account under DVP? If yes, margin providers have an entry requirement, which many of us cannot afford, and margin mechanism is not very clear. So I think some clarification there. I think this person is not quite clear about the margin mechanism as opposed to brokers. as regards to a margin trading account. So Jali, if you can sort of clarify that, whether it's mandatory for anyone or for everyone to open a margin trading account under DVP. Jali, I think you're muted.
Yeah.
Hi.
Yeah, it's not mandatory. Investors can follow the same practice on trading and settlement as what they were doing right now. They can, as I was telling in the first, they can stick to the credit agreements that they have with the broker, or they can, on their wish, they can go into a margin trading facility as well. So there's no requirement on DVP once you implement DVP that you have to go into a margin trading account.
Okay, so that's fine. That clarification is useful. We have another question again on margins, and I think this again relates to the broker level margin, but we need to clarify this because this person has some confusion. In the proposed new system, two concepts. I think Dulani, I'd like to pose this question to you because it's relating to broker margins. In the proposed new system, two concepts are seem to be used. One is the initial margin. Secondly is a variation margin. What do they mean? What do they mean? How does it affect investors? Second question, how does it affect investors? And thirdly, how does it affect the share market? And he goes on to say about the 2.5% and the 10% used for the margin classification. So the concepts are the initial margin, variation margin. What do they mean? How does it affect investors? How does it affect the stock market? Dulani, over to you.
Yeah. So as we said, there has been misconception about this margin and the credit facility. So I will just explain about the margin collection from the CDS from the stockbrokers. So in this margin, as you said, right now also we do collect margins from the stockbrokers for any over 20 million transaction. We collect a 15% margin. With the DVP, this margin methodology is calculation, the margin methodology is different. So we calculate margin in a different way. Instead of this 15% flat margin, as this person asked, we have two components in the margin. That is the initial margin and the variation margin. So initial margin is just to forecast any future losses that can arise from a transaction. And also variation margin is the mark-to-market value of particular trade. So based on these two components, we calculate a margin for the party broker based on their purchases and sales, and we net it off at the security level, and then we calculate this margin. So brokers are supposed to bring this margin to the CDS. And also, you asked another question as how this affect to the investors.
Yeah,
So-
Dulani, before you get to that, one little comment, if I may. I think the change in the methodology of margining is far more efficient simply because it reflects the volatility of the stock much better. And in fact, the more liquid securities, brokers can keep lesser margins for the more liquid securities. So in fact, it's a much better system of margining that we're introducing for brokers.
Yes, instead of this 15%, if you trade on a liquid stock, maybe it's 4%. So it depends on this value at risk value of the VaR value of the security. So that's the margin methodology. And also this collection also, as I explained, it's at the broker level. So depending on the client's risk, broker also, depending on the business model of the broker also, they may pass certain percentage of this margin to the client, but from the exchange perspective, we collect the margin from the stockbroker. So that is our margin methodology. And I think you posted another question.
Second, the person is asking how does it affect investors?
So there's no impact to the investor. Mainly we collect the margin from the stockbroker to make an obligation for them to make the payment on the settlement date. So that is why we collect this margin from the participant. So for the investor, there's no impact from this margin concept.
And it has no impact on the market as well. I think, in other words, in probably layman's terms, it's like something is due from a broker to another.
It's like we collect some advance payment from the broker before their settlement date.
Yeah. So we have this interbroker settlement. So when one broker has dues to another broker, we take an advance. So as to ensure that the balance would be paid, otherwise the broker will forfeit the advance. That's how that's how we run the system. That's how the margining system works, and that's how it has been. So that's the broker level margin, and we are not imposing any client level margins at all, even under a DVP system. So this is to do much or it's all to do between the stockbroker firms and the stock exchange.
Rajiv, I think right now we are doing kind of same thing similar to that, about 20 million, we charge amount, and So I don't think that the investor knows how the mechanism of the broker back office works. I think that maybe the concern that these people are having that is that it's going to affect the investor in such manner that DVP will be introduced and then there will be another charge coming in. I think we are doing this as a practice right now. So you don't know.
So there is, as I said earlier, with DVP, it will be a far more efficient way of margining with brokers, and it will be beneficial to brokers than the present system. Presently, they have to give 50% irrespective of what the security is. So it may be expensive, but the brokers are doing it already, and they are certainly not passing on the margins to their clients. Yes. So it's an existing system. We are only making it a little more efficient. So that's as far as the margins are concerned. Another question, we are turning to systems now. This investor asked this question: the market desperately needs a system upgrade. I think this person is referring to the broker level order management systems and the broker back office systems. And I think Chandrakant would like to pose this question to you. And this person says that some of these systems at times becomes unreliable as the servers go down while trading. With this mechanism, this investor asks, is it riskier? Is it going to be riskier with our platforms due to the unreliability from the service from some of the providers at certain times that they have experienced? Chandrakant, over to you. Chandrakant, I think you are muted. Chandrakant, you are muted, I think. No, we can't hear you. I think you are muted. Okay, so let's, I think we lost Chandrakant there for a minute. So let's get back to that question, and till he comes back on, I'll go to Dulani with another very important question that has been posed about dividends and rights. Dulani, about XD and XR. I think there's a lot of concern about XD and XR, and tell us how it's going to work. Tell us how it's going to impact investors.
Yeah, so as we explained, many things won't change with DVP. This is also, it's the same. So XD, XR concept won't change. So any investor who make their purchase before the X date, so they will be entitled for the corporate action. Let's say there's a dividend. If the X date is tomorrow, if you make a purchase today, you will be entitled for the dividend. As we said, only difference here is for the listed company, not to the investor. So similar to the current practice, if they do a purchase before the X day, they are entitled. But for the listed company side, right now what they do is they generate this entitlement schedule one day before the X day. So XD -1, they generate this entitlement schedule. But with DVP implementation, the listed company will get the entitlement schedule 2 days after X day, that is XD +2. So only difference is for the listed company. For the investor's perspective, there's nothing changed. So it remains the same. If you make your purchase before the X day, that's fine, you are entitled.
So Dulani, if I say, as an investor, I have to keep watching for the XD date and XR date, then nothing else I have to worry about.
Correct. Yeah.
So, okay, that answers that question. I think there are a couple of questions as to, particularly in connection when we spoke about the custody, that it come only on T+3. Naturally, there can be, concerns and questions. How do I get my entitlement? So as far as investor is concerned, nothing changes. So I hope you appreciate the fact that we have gone through a lot of effort and trouble in designing this system so that it's not going to impact you as an investor or the market. This project has been 3 years in the coming. We worked on it for a very long time. We have been engaging with all our stakeholders, with the brokers, and developing these systems over a long period of time. So it is not something that we suddenly pull out of the sky. A lot of work has gone in studying a model that is most suited for this market, and we introduce such a model so as to impact it favorably and cause the minimum inconvenience to people and stakeholders who are using the system. So good to see Chandrakant back online, and let's get back to the system question. I don't know, Chandrakant, whether you remember this question, so I'll make mention of it again. Market desperately needs a system upgrade. Some of the providers' systems are unreliable at times as the servers go down while trading. With this mechanism, meaning DVP, is it going to be a riskier with our platforms due to this unreliability in service? So, Chandrakant, over to you.
Yeah, can you hear me? Are you?
Yes, can.
Yeah. So basically, during January and February period, what happens was actually there was a huge surge in the number of orders that was placed in the market, and especially there were some brokers who have a larger retail client base had some system capacity issues coming up because of the large number of volumes, a sudden surge in the large number of volumes of orders that they were placing. So yes, we do understand there were some issues during the month of January, February, March. But no, we have advised the broker systems to get upgraded, and the brokers are now in the way of upgrading their systems to meet the new capacities, and plus they're looking at new systems also. So in the coming months, you would see new, more sophisticated systems are getting implemented at broker offices for the order management systems. And when it comes to DVP, the question whether there will be issues with introduction of the DVP, well, it does not pose any capacity issues since, as everybody has been talking, there is no much change in the front side. It's actually it's major changes are in the back office, in the brokers' back office systems. So the exchange systems has been, as Raju said, we have been working on this project for a long time, and we have upgraded our exchange systems to and the trading system as well as the deposit systems to cater the DVP change.
Yeah, thank you, Chandrakant. And I think we should mention the fact that, say, pre-2020 up to about 2019, we were averaging something like 5,000 transactions a day, and those systems are sized for that level of transaction. Nearly for 5 years, we had that kind of volume. And all of a sudden, we have seen a 5-fold increase. Now we are doing 25,000 transactions a day. So I think given that the system providers had to very quickly upgrade their systems, and as Chandrakant rightly said, there is an initiative currently underway to completely revamp the broker level systems. We did a systems audit on all of those. We have taken those audit comments, incorporated that into the new RFP, and hopefully we will see good, robust broker back office and order management systems working that will give you a better user experience to enable you to trade in an uninterrupted manner in the market. I think I must stress at this point also, there have been a whole heap of questions on short selling. But since we are not intending to launch out on short selling in the first instance, we are not going to take up those questions right now. Let's deal with trying to understand DVP and whether or not it's going to impact us very clearly. And once we introduce DVP, once we go live with it, maybe at a later point of time, we will do a complete education process on how short selling, if at all, is going to be introduced. We will then talk about how short selling is going to happen. So we are not going to deal with some other short selling questions that have come up. Let's deal with it at a later point of time. There one question that I like to pose to Tushar. This is about certain comments made over social media and particularly certain comments made by certain people may mislead particularly noisers or newcomers to the market and probably instill some kind of uncertainty and fear among new investors. Now, this question asks whether this uncertainty can have a negative impact and whether we should be worried and we should be following some of these comments that are made. Are these true or not? Tushar, I think you have some very good experience in this area dealing with social media. Probably you can best answer this.
Even I saw some comments. You can hear, no?
Yes, can.
Yeah, I also saw some comments. What I have to say is that, say, for example, if we are investing in the market, we have to have our own investment objectives. So one person's objective may be different from another person's objective. So then they should invest in the market based on these objectives. So what we always tell investors, don't follow others, but you have to have your own objectives and invest in the market. And what they should do is basically go and educate themselves, and also these kind of forums, and then they can call CSC, they can call SEC, they can call stockbrokers, and then if they have any issues, if they want any clarification, they can call us. And what they should do is not to follow other people in the market or go through other social media and they try to get advice from others, but get the advice from the relevant authorities, SEC, CSC, or stockbroker firm. Then they can get a clear understanding about the even the DVP, about the market. And then if what we always tell investors, they have to make their final investment decision, their money, and then they deal with their money. So what they should do is they should contact a stockbroker firm, but still they have to make their final investment decision. So what they should do is basically they have to listen to themselves and then take the investment decision. And what we said earlier also, DVP, there was some misperception in the market during last 3-4 days. And what we mentioned earlier, even during this program, what we mentioned, there won't be any impact of settlement, the T+3, and day trading, there won't be any impact. Credit, there won't be any impact. So I think to some extent, we have cleared those misperceptions.
Thank you, Tushar. I think that's good to clarify that. There are a couple other questions on some of the new products, and perhaps I can venture out to respond to some of those. The question is, what are the other financial instruments investors and traders could see in a future post DVP implementation? Some of these products we have already planned and may not directly be connected to DVP. Some may be, some may not be. But I'll just mention some of these products that we are working on. One is the real estate investment trust. Second is a gold-linked product that we are working on. Third is a OTC market for corporate debentures. Stock borrowing and lending is a new product which will come directly, for example, as a result of DVP. And another product that we can expect, of course, in the future are financial derivatives. I mean, there was a call, a lot of people were interested in introducing financial derivatives. Now, that is typically a product where you will have to have DVP in place before you do that. So DVP will allow us to get into a central counterparty system, a central counterparty guarantee, which is a prerequisite for instruments such as financial derivatives. So there is a plethora of new products and instruments that we can introduce to the market. Some, as I said, arising as a result of DVP. Some may not be directly even connected to DVP, but nevertheless, we have planned at least 5 new instruments which are being concurrently worked at. Stock borrowing and lending definitely will be as a result of DVP being introduced. So that's a quick flavor into some other instruments that potentially investors and traders could look forward to in the future. Connected to that, there's yet another question by this investor who asks us, do you believe that by addressing and implementing the DVP, we will be able to increase the liquidity of the exchange? That is not the only criteria that is stopping us from officially entering the emerging market status according to MSCI criteria, that is Morgan Stanley Capital Markets Index criteria. How do we overcome this? Now, first and foremost, we know that we are a frontier market. Whether or not we move to emerging market status is another conversation. Whether you're going to be a big fish in a small pond or a small fish in a big pond. Moment you migrate to emerging market status, we all know you're competing with the big guns. But as long as you're a frontier market, you are better competition and easier to compete. So, but at some point, we need to do this migration. We saw Pakistan migrating, and there are a number of criteria. This is certainly not the only criteria. DVP is only just one of the many criteria that is applied to migrate markets to emerging market status. One of the key criteria is the number of companies, the liquid companies that we have. Pakistan, for example, when they migrated 1.5 years back, they had 7 companies that qualified. Now in Colombo, we have just 2. And so we need at least another 1 or 2 to really qualify. So there are a number of other criteria as well, which will help us to migrate to emerging markets. So the answer to your question is, these are certainly not the criteria, but it's one criteria. And we need to keep working on all these criteria at a future point of time. Then we will be ready to step in there when our size and our liquidity is right. We will have the infrastructure criteria also ready. And this is one other infrastructure criteria that is on there, DVP, and then subsequent to a CCP. By implementing DVP, are we able to increase liquidity? Not directly, but it can have a positive impact. For example, by improving the settlement risk, by improving or minimizing the asset commitment risk, you're going to instill a greater degree of confidence among investors. That's going to come. That has come in a lot of other markets. And as a result, investors will be more willing to participate in market activity because they're going to look at risk. And one of the risks that they're going to look at is asset commitment risk, or the parting with your asset, payment for what you have sold, etc. So DVP will address some of these concerns to a certain segment of investment who will want that. So we need all kinds of investors. We need the retailers, we need the institutions, we need the foreigners, we need all of them. So different investors have different requirements, and we are catering to the different segments of investors by improving the risk profile in the market, and DVP is one such step. Okay, so let's get on to very quickly a few more questions that have come in before we complete our webinar today. There's a question, DVP, I feel, more matters for brokers, margin providers, custodian banks, etc. DVP is something internal between CSE and broking firms. For investors and traders, it matters, or the difference is less. Jalia, can I ask you to respond to that?
I think you addressed this thing sometime, I mean, some minutes ago. I think the same kind of question that you address it quite rightly. I think mostly, other than the investors in the market have been affected by DVP, I think the major changes will take place on the order management system and the broker back office system and the custodial banks and the other margin providers. So there, I think the question, there was not question. I think this thinking the person that who have put the question forward, I think that is right. There won't be any much of a change on the investor side on implementing the DVP system.
Yes, I think this person has quite correctly summed up the entire change, and the point that we did make. Yes, certainly the change is at the broker end, and I think less or very little to do with investors. And the point we are making today, and actually the reason why we also had this webinar today, is to give investors that assurance that this change is not going to make anything different to you as an investor. And I think some of you have very correctly understood that, but it's an important change, and it's an important change for stockbroker firms as well to do that for future development. One final question, Chandrakant, before we wrap up today. Are we going to have a mock trial? That's a question from an investor.
Yeah. So as Rajiv, you and Jaria mentioned, it's an important change, but then the change is happening mostly from the backend side of the broker systems where the changes are happening. So we have done numerous number of mock runs. So the need of a mock run for investors might not be there because the systems changes are happening from the broker back office systems side and the exchange side. Side. So we have done many number of runs of mock runs and test runs for the moment, and we have few more weeks, and we'll be continuing the said mock runs and testings. We have done industry-wide mock runs together with the international data vendors and all the members of the entire ecosystem. So depending on the successful mock runs in the future, in the coming weeks, I think I'm very optimistic that we should be able to implement DVP by end of July.
Thank you, Chandrakant. I think that we've come to a close of the webinar today. Tushara, would you like to make any closing comment to today's webinar?
What I understood, Rajiv, there was few misperceptions among investors. What we mentioned earlier, so we repeatedly talk about that. There won't be any impact on their credit. Brokers will give credit as usual. And also day trading, there won't be any impact. They can buy shares at 11 o'clock and they can sell it at 11.5. And then there won't be any impact on the cost of day trading. And also the other thing is that settlement, what we discussed earlier also, there won't be any issue again. As usual, it will be T+3 settlement. So if investors can understand these concepts, and then there won't be any impact on investors, negative impact on investors because of this.
Thank you, Tushara. With that, come to a close. We have dealt with most of the questions that we have got. We got a whole heap of questions, and what we did was we summarized it and into these areas that were that we dealt with today. So thank you for your interest. Thank you for joining us today. And if you do have any clarifications, if you do need to ask any more questions or clarifications, you may reach out to your stockbroker or call the stock exchange on 011-2356-456, 011-2356-456, and seek any clarification that you would want. This is not the only webinar that we'll be doing on DVP. We have planned a whole series of webinars to talk about DVP, and we're running it through all of our 8 branch offices as well around the country. So you can expect, if you do want to follow another one again in either English, Tamil or Sinhala, you're most welcome to do so. So once again, on behalf of all of us and at the exchange, we thank you for joining us today, and I wish you all a very good evening. Thank you and bye-bye.